It's time for the currency report. I want to take a look at our very own Canadian dollar, best performing currency in the G10 in 2019. Clearly, that is not the story of 2020 and in the past even just couple days. 72.23 right now against the greenback. We're down another third of a cent, and clearly, when investors are looking to get away from risk assets, obviously a currency like ours, often tied to commodities, it's not a favorite play. Let's get some more insight now on what's happening. Adam Button's the chief currency analyst at ForexLive and joins us to weigh in. Good to see you, Adam.
Hi, Greg.
So let's start with the Canadian dollar. Obviously, it's had a tough go this year, not surprisingly. A lot of things weighing on us. And why don't we just throw oil into the mix, too, the way we started the week?
Well, yeah, I mean, oil only down 5% today. That's outperformance. But the Canadian dollar now, it's down 8 days in a row. We're at the lowest since 2016. All the technical support now is gone down to about 68 cents. So, the Canadian dollar is nowhere to hide out in a global recession. It is, there's nothing that Canada can do to change the prices of these commodities and to buffer the economy against some of those headwinds. I'm surprised the Canadian dollar has held out as well as it has to this point.
Okay, so if being at 72 and change is holding out well, where could this Canadian dollar end up being in the next weeks, the next months?
Well, you look at a crisis like this and you start out, well, this is coronavirus, and you try to quantify that and the possible economic impacts, and they're, dire. But what you don't often think about are the black swans that can be related to a sudden stop in economic activity. So we look at OPEC as a separate event, OPEC falling apart. But really, the reason OPEC fell apart was because they needed to cut 1.5 million barrels per day because of coronavirus. So you see something like this put stresses on all parts of the economy, financial system, even socially and politically. So that exposes the fault lines like you might see in Canada in banking and housing. You don't really know where they are, but Canada, with high household debt and a large commodity sector, certainly has a risk of some kind of overshoot. But even on a base case scenario, I think something like 68 cents is almost the minimum at this point of where I think we're headed.
Very interesting. 68 as a minimum is where we're headed with the loonie. I want to talk about the currency trade overall. In times like this, when you have central banks in numerous countries cutting their rates, we're waiting for some sort of fiscal stimulus. Where does the haven bid come? I mean, when I saw it in the Japanese yen, you're like, okay, well, the yen has traditionally been one of those places, but that's not an economy that economy has not been in good shape for a long time.
Yeah, you're running out of great places to go. I mean, the yen and the Swiss franc are the traditional spots, and that is working very well. You're seeing from time to time some flows out of that. You might see Japan or Switzerland try to fight it with certain measures because it certainly doesn't help them. Gold has not done very well. It typically takes until rates have bottomed out and you start to see massive fiscal stimulus before you'll see that huge updraft in gold. So the timing on that is a little more difficult. I mean, the US dollar will be a good spot to hold out, if only because emerging market money is starting to panic. We saw the Mexican peso hit a multi-decade low today, and it's places like that, if they're hard hit by the coronavirus, that the money will flow into US dollars as well. So those are among the places you want to be in, and certainly not the Canadian dollar.
Now, last night, Donald Trump addressed Americans. The investors clearly did not hear anything in there that gave them any confidence, the steep sell-off. But then the Fed stepped in today, trying to inject a massive amount of liquidity into the market, buying up treasuries. There was a rally for a little bit in the equity space, and then it came off. How did the currency traders take all that information that we're trying to digest from the Fed today?
Yeah, I think it's not a surprise that we had a dip. I think there are only two kinds of market participants right now, those who are selling and those who are waiting for a bump from the Fed in order to sell. This was massively misunderstood off the top. So the Fed came in with 1.5 trillion. And to put that into perspective, that's the size of the entire U.S. student loans outstanding. And 500 billion of that was announced for an auction in 32 minutes to close today. So from my perspective, somebody is short liquidity. And we talk about these risks, these black swan risks that get exposed. Somebody needed that for settlement today. So whether it's a European bank or something out there is massively short on liquidity. And I think that's what the market's saying right now as we see this renewed flight to safety.
Okay, so those are the Fed actions. Obviously, we heard from the European Central Bank as well. Let's talk about that. That seemed to be deemed a major disappointment by investors today.
Yeah, the banking industry there has been on its knees for a number of years, and they just came off as tone deaf. They're really pushing the fiscal side, and that's been the ECB's playbook for a while, and I think they're trying to push them over the edge, but the market just isn't having it. I mean, a 38% decline in Italian stocks, for instance, right now, a closure of all activity. There are massive strains on the financial system there. And I just don't think the ECB stepped up to meet that or even really comprehended it. And maybe that's what precipitated the Fed coming into the market.
Okay, so we saw so much action to cover with you, Adam. Let's talk about the Bank of England, what we got from them. And that was a bit of a fiscal and monetary double whammy there. Was that just yesterday? It's so hard to keep track. But we did get the bank cutting and some stimulus on the government side.
Yeah, the pound's suffering a bit today on flows. But what they did was really the model for what governments can do now was huge fiscal stimulus that's extremely timely. And it's something you would hope for from the Canadian government, and hopefully even they move up the budget if they can. So it was effective, but at this point, the market, I don't think there's anything you can do from either the fiscal or monetary side. The only way to attack this is on the biological side. And we see so much talk about the coping with the economic effects of this, but that's treating the symptoms. The cause of this is the health crisis, and it would be, I think, comforting to markets if we saw a focus on social distancing measures and a true focus on getting on top of that side of this, because I think we need to take some short-term economic pain, or it's going to be a lot of long-term pain.
Adam, before I let you go, given the fact that you're saying it's really not a job for monetary policy, really fiscal policy, clearly we're talking about a public health issue. The Bank of Canada is fully expected by the market to keep cutting deeper and deeper. They're probably going to have to deliver on those expectations, but not going to have much effect? Yeah,
no, we're in the situation now where they need to go beyond. I mean, it's good for Canadians on their mortgages. I mean, there are these traditional lagged effects. But the Bank of Canada needs to be watching right now is the financial system, the oil market, anything in the bond market. I mean, and we have to start talking about special facilities in terms of credit, QE, going beyond. I mean, they have a better insight there into what's happening in that system. And you just absolutely need to have confidence that the Bank of Canada is on top of it. And when you see falls like we have in the Canadian banks, I mean, it raises some questions about what's really going on out there.
Adam, it's always great to get your insight. Thanks for joining us.
Thanks, Greg.
Adam Button is Chief Currency Analyst at ForexLive.